Hi there, traders. This is Brad Gilbert with FX Market Insight for Monday, the 7th of June. All right, now the non-farm payrolls data here, a little bit disappointing, right? But you know what? I've seen the move in the currencies, and I've just got the dollar index here on this page. You can see sort of the direct move down. It's only gone down to like 40 points, but it's enough to really derail the dollar rally. But the one weird thing to me, if I just get up the forecast here, by looking at the payroll number 559, the forecast was 650, right? This isn't far off. And when you look at the average earnings month on month, year on year, okay, much better than expected. And even the unemployment rate, but let's clear that, 5.8%. Well, they're expecting 5.9. So really, I think the market has overreacted to the data. Now, all the commentary out there, if I just swing it over that way, like really quick to sort of blow out the Fed tightening situation. Dollar falls after US jobs data dims hopes for Fed tightening. Now, this number isn't that bad, and it's very close to forecast. It's much better than the prior number. I just don't get the whole rigmarole of why the dollar got smacked so quickly when the data was, if anything, mixed. Okay, non-farms not quite as high as it was, but the other data, unemployment rate, average earnings, everything was pretty good, or better than expected. So it's a bit of an odd one, I think. I don't know if the dollar move is over just yet, but especially with US CPI out this, I think it was Thursday. Okay, but on the weaker non-farm result, you get equities rallying. Okay, because the chance of higher rates has dissipated somewhat. I think this is an overreaction. So that created on Friday a dollar block rally, risk on, and the dollar falls, right? If I show you the charts, it makes it a lot easier to see. As we had the dollar cruising to the top side pre-non-farms, and then just a bit of a whack down. All the currencies were impacted, and it's a good sign, right? That everything's working in unison. Look at the big ranges there on sterling. It's got its own sort of mess. Some of these moves were exaggerated, right? Primarily because the dollar rally here the day before had really broken a lot of technical levels, right? So, you know, it was all set up for a massive move, a dollar rally, 200-300 points, had that data been stronger. Now, what we've seen is a simple, this doesn't change the trend. See how it's basically come back. If you look at Euro, Sterling, Aussie, Kiwi, actually pretty much all of them. Okay, they're basically back to where they were prior to the initial rally of the dollar on Thursday. So we're slightly just back into the range. The dollar move isn't over yet, right? You've got to focus on that's extremely disappointment, but focus on what's coming up. Now, when you do look forward to what's coming down the track here, it's really coming down to the Bank of Canada. To me, the real big events, I mean, secondary event is the zoo economic sentiment numbers. A good chance to get something going on in Euro, GDP there in Euro as well. But you come down to, where are we? Here we go. The US CPI numbers, right? This is the second double barrel big macro number to really tell us what's going on here with inflation, right? We need to know, you know, this is the bigger catalyst. I know they've been focusing on employment, and the employment numbers weren't that bad. So just keep an eye on this because it's going to be very interesting as we go through the week. Now, there's a couple of other things coming out. The ECB meeting, you've got the Bank of Canada as well, right? So we've got some big stuff coming out. All on the 10th of June, right? So you've got two central banks, and most importantly, the US CPI numbers. This is a real game changer week, right? We need to sort of see what's going on here. I don't think there's any changes here from the Bank of Canada, but we'll have to see what their statement says. That's been the answer so far. I can't see obviously the ECB doing anything, but statement, once again, could give us some insight into what they're thinking. But the US CPI number is the one I'm really looking for. And that's primarily because when you look at the Bank of Canada and the ECB, it comes down to ambiguous statements as to what's going on. With this US CPI number here, it's a number, right? It's either stronger or weaker or as expected, and you can trade off that. We know what a really strong CPI number does. It sends the dollar through the roof. A really weak one pushes it to the downside. So that's the real big trade for this week. Maybe too long for some traders to really hang on and be patient and wait for that. In the meantime, all you can do is come back and if I just come back to the technicals, is start going through your charts and start cleaning them up, right? Because, you know, we've got new levels, we've got new lows from last week, new highs. Start to get your charts organized and work out where these key levels are, all right? And that's all you can do at this point. Wait for momentum to come back into the market, and that's going to come from the economic numbers. Just looking at what we've got today, like Monday is not the best day to be sort of throwing around a lot of risk. But if you have to, keep an eye on the sort of maybe the Swissy unemployment. Rarely does it change. Industrial orders out of Germany, very important in the overall scheme of things. And you've got a few Swissy numbers there, but really nothing extremely tangible to really rip your eyes into. Maybe check out that consumer credit number out of the US. That could be something to have a little poke or prod at. You're really waiting for Tuesday with the German zoo economic sentiment numbers. Until then, it's going to be a little bit fractious. If anything, keep an eye on the US equity futures for direction. At the moment, they're slightly off a touch. So what does that do? Well, we had a risk on situation on Friday. You'd expect the dollar block just to drift lower and the dollar maybe just to come back a touch. So we'll see how that plays out. But really, we've got a big week ahead. Now we've got the non-farm payrolls out of the way. As I said, an overreaction, primarily because the market had already geared itself up for the move, technically. So we've just seen a correction, like a load of stop losses triggered. All those positions were squared up or taken out after those non-farms. I still think the dollar chance of a rally is in play, but it's all going to come down to the US CPI number. All right. And you know what? If the number is exceptionally weak, we're going to have a great opportunity to sell dollars across the board. We'll see how it goes from there. So really important week. Get yourself tuned up and prepare for the opportunities. All right, guys, have a good one. Cheerio.